After reviewing the papers, I don't know that I have enough information to say whether it's the right thing to do or not, because it doesn't show the fund balance at the bottom of the capital projects fund sheet and the combined budget sheet. And without knowing what that balance is, it's hard to know whether or not a tax increase is required or not. From my perspective, a tax increase is permanent. Once it's made, it's not ever given back. And you may have a capital requirement this year that you don't have the next year, that may be a requirement on the budget that might reduce your fund balance this year. But if your fund balance is significant enough to handle that variance for this year, it wouldn't make sense to increase something that's permanent, taxes, in order to cover that. So I don't know if that's something that the public is supposed to know or why they were left off the papers that were handed out.
It's not on a traditional budget the way they're prepared, but it's certainly information that's out there. Audited financial statements do show the prior year fund balance, so you could calculate that. But those are numbers that you could obtain. So, but they're not presented normally on the budget.
Are they?
Normally the budget is the revenues and the expenditures, but it doesn't show the balance sheet. Right. Anyway, and the fund balance is a portion of the balance sheet.
Right. The most significant increase in the budget for this year is the fire apparatus and vehicle replacement, which is a capital expenditure versus an ongoing. I mean, you have to replace your capital over time. Technically, over time, we should have been increasing our fund balance to cover those kind of capital increases in the past. And if we have been in the past, then that $300,000 should be covered by that. Even though we may have a deficit this year in cash flow, it should be covered by that. So without knowing what that fund balance is and seeing the history of that fund balance, it's pretty difficult for us as taxpayers to say whether or not it should have a tax increase to cover this expenditure for this year. Like I said before, once a tax increase is given, it's never given back. And so it's a permanent decision, something that will affect every single year, not just this year. So I think it behooves it should be communicated to the taxpayers what the effect that will have on the fund balance. And if it puts it into peril, where we can't handle contingencies that happen as a result of this issue, I can see needing a tax increase. But other than that, we really don't know.
Okay, great.